Many of the world's most successful investors running the biggest funds in the world have seen an opportunity in Meta stock, previously known as Facebook, with many adding shares to their portfolio in recent months. Now, on top of this, Meta stock has seen a significant price drop in recent months, which means that it now trades at a record low valuation. So in today's video, I'll be taking a deeper look into why the world's super investors find Meta such an attractive buy right now, including the exciting potential that this company does have in the future. Be sure to leave a like on the video if you enjoy it, and without further ado, let's get right into it. So first of all, what is taking place with the big money buying Meta stock? So a super investor is a term that is given to individuals that have an outstanding stock market investing performance over a long period of time and are usually portfolio managers of the world's largest and most successful funds that have billions of dollars of capital that is invested in them. So fortunately for us, we get to see the portfolio holdings for many of these super investors in the form of 13F filings that require large fund managers to disclose their holdings every quarter. So looking at the data from datarama.com, there is one stock that does stand out as being particularly popular amongst these super investors in recent months, and that is obviously Meta Platforms, previously known as Facebook, and it is the most owned stock amongst the world's super investors right now. And it was also the most bought stock during Q1 of 2022 and has been the most bought stock over the last 2 quarters. Now, on top of this, Michael Burry, who is famously quite bearish on the stock market and is very selective of the stocks that he goes long on, added Meta stock to his portfolio in the last quarter and gave it a 10% weighting. And then on top of this, other super investors such as Terry Smith, Chase Coleman, and also Pat Dorsey have assigned a portion of their portfolio to Meta stock. So with so many of the world's largest and most successful funds funneling capital into Meta stock, I'm going to be taking a closer look into what makes Meta stock so attractive right now compared to other stocks on the market, and why Meta stock could outperform significantly over the next few years. So let's take a closer look at Meta's valuation and why it is what it's valued at right now. So Meta is down by close to 50% so far this year, and it has definitely had a pretty awful start to 2022. And it is the company's worst decline in history in terms of both percentage drop and also value. So the main reasons for this sharp decline in the share price do include recording a decline in Facebook's daily active users for the first time ever in Q4 of 2021. On top of this, Apple's privacy changes to iOS did impact advert sales. And then we've also got the emergence of TikTok as being a major competitor in the social media space. Meta has also been funneling a ton of their cash into the Metaverse project, which is under the Reality Labs unit of the business. And this is an unprofitable portion of the business right now. And there are certainly some investors that don't see this as a good use of cash. The overall market decline in tech stocks hasn't helped Meta either. And all of these factors together were the perfect storm really for destroying Meta's stock price and putting it at a valuation that is quite frankly insane in the opinion of many investors, clearly including many of these super investors who are buying Meta stock. And as of right now, Meta has a PE ratio of around 13 to 14, looking at the prices today. So it definitely is a quite attractive PE ratio. At the end of the day, Meta is a tech company that has high margins and will most likely continue to grow in the coming years. However, it is now trading at a vastly cheaper valuation than some consumer staple stocks that do have little to no growth. So for example, Coca-Cola is trading at a 25 PE ratio, Procter & Gamble is at a 24 PE ratio, and Kimberly-Clark is at a 25 PE ratio as well. So I'm not saying that these stocks are bad. They're consumer staple companies, and they're fairly sticky in terms of their products. But when you look at the growth rate of these companies, there is very little to get excited about, but they are still trading at 20 or above PE ratios. So there definitely is a divergence between some tech stocks like Meta and these consumer staples. So now let's look at why Meta is an attractive buy and potentially some of the reasons why these super investors are buying in over recent months. So first of all, in Meta's Q1 of 2022, in their earnings report, they've already shown a reversal in their active users, which is now back to being in growth mode. So Facebook daily active users did increase by 4% year over year and 2% sequentially, gaining users across all global regions besides Europe, which lost 2 million users sequentially due to the Russia block. So when you consider that the current situation in Russia is pretty bad and Russia have actually banned Facebook, I think this is a very impressive quarter for Meta to show a user growth despite losing all of the users that were inside the country of Russia. And then on top of this, the monthly active people across the family of apps also grew by 6% year over year to 3.64 billion people. Meta have also created a fierce competitor to TikTok in the form of Reels, with Mark Zuckerberg claiming that their investment into this area of the business was paying off well. So Reels now account for more than 20% of time spent on Instagram, and videos now account for 50% of the time that people spend on Facebook. And this isn't the first time that Facebook have acted quickly to adopt new features that are becoming popular in the social media space, as they have famously done this before pretty well when they introduced Instagram stories, essentially taking the idea from Snapchat. So Meta's continued ability to pivot into the latest social media trends does remain very impressive and gives investors quite a lot of confidence that they have the intuition to remain on the top, in the top spot for the social media space. Now, focusing a bit more on Reality Labs, it does remain as a cash burner for Meta, as spending has continued to ramp up for the development of their VR headsets, as well as the overall metaverse ecosystem. However, spending on Reality Labs will be cut back in order to keep expenses in check, and the forecasted total expenses for the company in 2022 has dropped to $87 billion from the prior outlook of $90 to $95 billion. So these expenses will also be prioritised more on the cash-generative family of apps instead of Reality Labs, which many investors believe is the right step forward for the company. So also, Meta does have a gross profit margin of roughly 80%, and they do have a great free cash flow yield of approximately 6.8% right now, which is very good, and it is also higher than all of the other mega cap tech stocks. So this free cash flow can be used to generate shareholder value, such as making share buybacks, and in Q1 of 2022, Meta did buy back $9.5 billion worth of stock, and they do have $29.4 billion left to spend on repurchasing stock as part of their repurchase program that was announced in January of 2017. So this is definitely great to see, and if Meta can keep buying back stock at these discount prices, then that creates more value for the shareholders. Now, if the metaverse does truly take off over the next decade, then Meta is definitely positioned very well to be one of the major players in this space, if not the top player in the space. So it is definitely hard to know what the metaverse could look like in the future, and a lot of people in the tech space believe it could be the next generation internet. So this aspect of Meta's business probably shouldn't be completely ignored and overlooked. So if Meta do create their own metaverse platform, and it becomes one of the most dominant platforms in the future, then this is bound to bring in a lot of revenue and profit for the company and could add extreme value to the stock. So it is definitely a speculative part of the business for sure, but one that could definitely pay off big in the future. And even if it doesn't, then Meta's core business should still be just fine as it is. And then finally, there is no denying that the future is not perfect for Meta, and they do have some headwinds within the company that they're going to have to navigate around. However, at the current valuation, I believe that there is very little further downside that comes from here, especially at the $170 range. I do believe that that is an extremely attractive price to be buying, in my personal opinion. But yeah, it does come along with a lot of potential upside as well, as I've mentioned before, with the metaverse and the gradually growing revenue and the cash flow that they're generating right now. So ultimately, Meta is a growing company still, and they are expected to grow their revenue by 11% for the full year of 2022. And these super investors clearly find the risk to reward ratio for Meta particularly attractive right now, while it is trading down at these depressed prices. So that is all for today's video, guys. Ultimately, I am very bullish on Meta at these current prices. It seems that these super investors are also quite happy to be buying at these current prices as well. But please do remember that this video is for purely entertainment purposes only. It's not financial advice, and I'm not a financial advisor. But aside from that, guys, if you enjoy the video, please remember to leave a like, as that does help out the channel a lot. Drop me a comment, let me know what your thoughts are on Meta stock right now. Also be sure to subscribe if you want to see similar videos to this in the future. And apart from that, guys, thanks a lot for watching.